Well, greetings to all my investment clients. My name is Walter Measures, your wealth manager and tax advisor CPA. This is our weekly stock market recap as of August 15th. I am recording this on Saturday. Before I get into the nitty-gritty of the weekly stock market recap, I need to read this disclosure statement. So just overall, if any, this video is exclusively being recorded for my investment clients. Anyone else watching this video, this is not intended as investment advice or solicitation to buy or sell any securities. So I would advise anyone other than my clients to stop the video and read the detailed disclosure. If you want more information on myself and my firm, Trinity Wealth Solutions, you can always go to FINRA, brokercheck.finra.org. Or you can go to our website, www.trinitywealth.net. Again, www.trinitywealth.net. Okay, so now that we got this out of the way, let's talk about what the stock market did. Let me get back to Friday. Oh, before I get into the charts, just real quick to all my clients, we are back in the market, 60% exposure to the market and 40% in treasury bills, so 30% in S&P 500 and 30% in technology. So what you see on the screen, I'm just comparing different asset classes: gold, long duration bonds, technology, and the broad market. As you can see, if we're looking at stocks, pretty much Friday was slightly down, 0.24. Technology was down almost about 0.5%. We look at 5 days. The market is really trying to find a range. It's kind of trading in a range. Still doesn't quite know which direction it wants to go. Again, our research company said, hey, it's time to get back in because the momentum has shifted to the probability upward trend for the stock market. So if we look year to date, again, there was a pullback in April, almost 20%, and then the markets are going up again. So we're trying to capture some of the upside potential, but with a lot of caution, as I'll talk about market cycle stages. So if we look at 5 years, the market has been, since 2022, kind of trending up. There was a significant pullback this April, around 20%, and then recovered pretty quick and trending up. Nothing goes in a straight line up. So just looking visually at the chart, the higher the market goes, the greater probability of some kind of reset pullback. How much? Nobody really knows for sure. There's many predictions. Some are saying 10, 20, 30, 40, 50%. Time will tell. Our target is that no client loses more. It's a goal. It's an objective. It's not a guarantee, but that's our goal. Target is try to minimize no more than 6% on downside, even if the market goes down 30, 40, 50, 60%. So that's enough about the stock market. Again, big picture, we're back in the market, not 100%, and the expectation is short term, there's an upward momentum trend up. Is that going to come to fruition? We'll just have to see. So if we look at, let me pull up the chart here, market stages, and I've talked about this, I think, maybe a month ago, did a video, excuse me, And there's four distinct stages or cycles in a stock market. And this repeats. How long these stages last, each stage cycle is different. Stage one is basing. This is typically after major correction. Stage two is advancing, meaning the markets are recovering. That's a profitable trading or strategies to make money for clients. Stage three, which we believe, based on research we're getting, that we are in stage three, topping. How long this stage lasts, it really every time is different. We've been talking about stage three for, I think, almost a year now. Still, the market hasn't rolled over, hasn't pulled back. But stage three is kind of a finicky. It's tough to make money. You have to be more cautious and more risk averse, because when there's a pullback like we saw in April, we didn't know if that's going to continue beyond 20%. Nobody knows. So the best thing to do is get out of the way. As the owner of the research company that we utilize says, hey, if there's a storm out to sea, get your boat into shore and watch from the sidelines until the storm clears, and then go back out. That's kind of similar what we're trying to do. In stage three, could be lots of volatility, lots of storms, and we just don't know when there could be a start of a major pullback. And most people say, well, it hasn't happened. Every time there's a pullback, it just recovers real quick. Well, that's fine and dandy, but nobody knows for sure when the next pullback is that going to be the one that eventually maybe is very significant. Like we saw year 2000, 2002, 07, 09, just major, 50%, 60% drawdowns. And that's what we want to avoid for our clients. And stage four is the declining. That's also very profitable. So what's interesting, stage two, stage four, I would say stage four is even, the probability is greater of making money, profits for clients. Most investors think when markets correct them, just get out of the way, there's no way to make money. Not true. If you are in the right asset class, you can make money. Like, for instance, at some point we will be going into long duration bonds, because it's a matter of time before interest rates significantly come down. That creates an amazing opportunity to make money. We did that in 2020, where I think on average clients were up about 25%, where the market, that was 2022, we're down almost 40%. That's a huge, huge difference. So again, stage three, much, much tougher to make money, and that's where we believe we are in this stage. Is it going to last for another month, 3, 4? Nobody really knows for sure. Our research company just follows the money, follows momentum, follows price. Okay, so that's enough about stock market cycles. So we are in the market, but very cautious. The other thing that I want to talk about is the jobs numbers that was reported a week ago. And one thing that I want to focus on is, let me get to the proper, here we go. So for July, the August numbers were not good. Payrolls were 73,000. Consensus estimate was 104. But the big one really is the revisions that really nobody's talking about. So for May, initially jobs number reported were 144,000. It was revised to 19,000, and June gains were revised down from 147,000 to 14,000. These are significant numbers. What does that show? It shows a weakening of the jobs market and potentially recession. So the 3-month average monthly payroll gains has fallen sharply to 35,000, down from 64,000 in June. So the revisions We're in total $150,000. I'm sorry, 150,000 jobs. So it's a huge number, which signals, hey, the stock market, the job market is starting to soften. The other thing I want to focus, when do recessions and employment, what's the correlation? If we go back to 1948, unemployment rate was 3.8, which is a good number. That's a low rate. But guess what? A recession started in 48. Let's go to more recent times. 2001, again 4.3. That's kind of where at 4.2, and the consensus is, hey, that's decent numbers. That's not recession type numbers. Unemployment. Guess what? That's where recession started. 07, the same thing. We're a little higher, 5%. But again, the job numbers, these are lagging indicators. So right now we're at 4.2, and everybody's consensus is, hey, unemployment is not that bad. But the other thing that's not reported in these unemployment numbers is, what's interesting is after 12 months, if somebody's been looking for a job and can't find one, you just get dropped out of that pool so the percentage is lower. Some people did revisions. What if we counted those people who dropped out of the jobs market? We're probably at 5.7, 5.8. So anyway, bottom line is things are slowing down economically. The economic indicators are going in the wrong direction. As Jeff Snyder, who I follow on YouTube, says, we're in a kind of an economy that forgot how to grow. Means things are slowing. Remember, recessions don't happen overnight. It's a process. So are we going to have a recession this year? I don't know. All I can say, the probability of some kind of reset is getting higher and higher. We haven't had a recession for over 15 years. Historically, that's never happened. So these cycles happen and will happen. So at some point, we will have a recession. So on that note, that's about it for this weekly stock market recap as of August 15th. Hopefully everybody's doing well. Just a quick reminder update. I think I mentioned I pulled my muscle in my shoulder and back, doing much better. Just doing lots of stretching exercises, stretching my muscles. So I'm slowly but surely getting back on track, a lot better than I was 2, 3, 4 weeks ago. And hopefully within a month, I should be back to normal. Anyway, thank you for watching. If you have any questions on why we got back into the market, hopefully this video kind of explained it. But you're going to call me directly. 586-873-8156. So wishing everybody a great weekend. Stay cool, stay hydrated, and we will talk to you next week. Take care. Bye now.